All right, hello everyone. Welcome again to another webcast here. We're delighted that you're taking time out of your busy schedules to be here with us today. Hopefully everybody hears me loud and clear. We're going to be talking about how to thrive in a trader's market. So very timely. Obviously market having big gyrations here lately, and this is a webcast that is aimed to help solve the riddle for everyone. So let's get into it. Let's start talking about it. All right, so with so many different webcast offerings out there these days, it's always a good idea just to right out of the gate give you some insight into what is to come so that you can make some decisions if this is going to be the right place and the right time for you to be attending this webcast. So you are in the right place if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster. So when we use the word short-term, or I guess the conjunction there, what we really mean is not intraday trading for the most part, although we do dabble with that from time to time. Essentially, we're talking about swing trading, and days to weeks is going to be the predominant type of trade that we're going to enter. So this is far different than, say, retirement, and also not all the way down the rabbit hole towards the day trading front of things. We're right in that sweet spot, right in the middle. You're also in the right place today if you want to feel confident in your decision that you bought the right stocks at the right time, and most importantly that you can sell them at the right time in the future. So we're going to show you plenty of indications on some recent performances that were executed in real time through real brokerage accounts that will hit this point home very cleanly for you. And if that sounds like it's you, then if you stick with me here for the next 45 minutes or so, I would say at this stage, I'll show you that you can adapt and thrive no matter what the market does throw at you, today being no exception. My name, just quickly, is Steve Chappell. I'm the Director of Trading Systems Development here at a company called VectorVest, for those that might be seeing us for the very first time. It's my privilege to be here with all of you. I've been with VectorVest now more than 20 years, and it's been quite a journey. And I'm just a small part of a very highly skilled and successful team of people here at VectorVest, and the one thing that we all have in common, of course, is that we take pride in delivering the best stock market guidance you can get anywhere and even at any price. And certainly with a free webcast offering today, that continues to be the case. So let's get to it. You know, in order to make all of this a reality, though, in order to be able to thrive in the current market conditions that we find ourselves certainly in today, you're going to need to have the right tools in order to adapt and therefore thrive, to be able to conquer any market condition. Okay, and so we're going to be taking some time showing you some of the tools that I use, have used for many years now, and have been doing it live in front of customers for more than 7 years on a daily basis, in something we call the Jockey Club that you'll learn a little bit about in this presentation. But that's wonderful because you get to see the tools in action, and so we're going to be showing you some of the trades that were the results of those decisions, and then ultimately, most importantly, give you a glimpse at some of the tools that helped us make these decisions. Okay. Here's a couple of recent examples of just some campaigns that we did. So back in early January of this year, we noticed that the stock market was ripe for conditions that we term around here bottom fishing, and we noticed that one of our favorite strategies was off and running that morning in a tool we call the Derby. I'm going to give you a better look at this tool here in a bit, but just kind of going off the image that you see on your screens right now, what we do is we take all the strategies that we track in VectorVest. Each one of those strategies will then find 10 stocks that are best suited for that strategy, and then it tracks the performance of them as the market rolls out. And the idea here, the reason we call it the Derby, is it's built in the spirit of a horse race. So, you know, just like with the Kentucky Derby not far in the rearview mirror right now, wouldn't it be nice to well, in this case, the underdog won, didn't it, right? But wouldn't it be nice to, in most occasions, for those horses to get all the way around, several lengths before you would place your bets, right? And so that's the idea and the spirit of what we built. So that we know if the conditions are right and we see bottom fishing strategies exploding, we know it's time to pull the trigger on those kinds of stocks. Whereas if markets have already been rolling well up off the lows and we're in a high momentum phase of the market, Lots of times what we see here are going to be high momentum strategies, and we jump on those. And certainly the one main paramount theme that's been resonating in the Derby seemingly on almost a daily basis for more than the last year has been energy. It's just anytime you open up any of the scans in this tool here lately, and you'll see it probably even again here today, they're just littered with energy stocks. And so we've been doing pretty well this year, even long, because we've predominantly either been bottom fishing when the opportunity was right, or in only for several days at a time, or really predominantly picking either contra ETFs or energy stocks as opportunities to go long when the market is healthy, and short, of course, when the market is unhealthy. And so ultimately, though, what this means is, in just a couple of days, this basket of stocks was up 9%. And most people would kill for that in a year. Here was another bottom fishing campaign we did in March. We also did another one here recently where we made about another 4 or 5%. But this one back in March was pretty good. We were up more than 24% at one point. We walked out the door with just a little less than what you see here. I think it was about 17.6% or so. But these are incredible numbers when you think about the kind of year that we've had, and you're thinking about these are campaigns where the duration was literally just days on all of these trades. Okay, you can see double digits almost across the board and every stock was green that we purchased. Okay, so we're going to be talking then about the tool, how we were doing some of what you just saw here, and then what we also do in terms of we have a systematic approach, which is kind of like a trading plan that can consistently be followed, and we also do a lot of cherry picking and going through the tool and finding some of the very best trading opportunities given the current market conditions. So let's get over and take a peek, and let me show you around. This is the fun part. Get out of the slides, man. Get into the actual tool where I can show you something. All right, so probably no stranger to anybody at this stage right now that the market had a pretty rough day today. What you might find eye-opening, or may not, we'll see, is our tools were telling us that if you wanted to do anything today, it would have been on the short side. And that was even as the market opened up. So I'm going to show you why that is and how it's done. Okay, so if we come over to this tool up at the top called the Derby, I'm going to start with a very simple approach. We have a timing model in here. Now, what we like to do with this timing model, it's over here on the left called the Derby timing indicator. We like to use that in, in most cases in confirmation with the larger trend of the market. So, we really like buying stocks when the week over week trend of the market is up and this timing model is bullish. And then we really prefer to go short the market or long contra ETFs, say, when the week over week direction of the markets is lower and this indicator is bearish. Any good trader always looks at multiple frequencies in terms of making the best decisions. Having said that, it is also a tool where if you want to get out there and gunsling it, it's still going to lead you the right way on even an intraday basis, just like today. So if I click on this and open it up, you're looking at a 1-minute bar chart now of today's trading action. Okay, and the market, of course, opened up a little bit soft, and really, kind of bounced around a little bit, and ultimately really began to sink in the afternoon as we head into the inflation numbers tomorrow. So probably not a huge surprise to a lot of us. Maybe the magnitude more so a surprise than anything else, perhaps to some of you, right? But let's take all of that out of the equation and say, well, did anybody know that the landslide was likely to come before it did? And so when we look at these lines at the bottom, so the top is obviously a 1-minute bar chart, as I explained. The bottom is that indicator that we saw on the prior page, except now you're seeing its behavior over the course of trading time. And so we draw a couple of lines here. One is right across the level of 1. So when the red line is above 1, the market is more bearish. When the green line is above 1, the market is more bullish, and vice versa. Okay, so in an ideal sense, if we're going to go short the market, we want to see the red line above 1 and rising. We want to see the green line below 1 and falling. And then we have a green dotted line there at the level of 1.2. And we do that because that's our actionable level. So we want to not just be marginally bullish or bearish. We want to have enough momentum in that direction to indicate that you're likely to continue to head that direction, even in spite of some volatility for the duration of the day. So for example, as you look at this chart here, as we opened up this thing, as the market was shooting lower, really the red line started to shoot higher, right? Indicating more bearish momentum. Now, when I say it's not purely looking at price action, so I'm not going to go all the way down the rabbit hole with this, but it's looking at all the major indices, it's looking at every stock in VectorVest, okay, and it's looking at not only the directional movement of those entities, but also the magnitude. So it's more similar, although definitely not the same, but more similar to something like an oscillator that you would use in technical analysis. Okay, it's our own proprietary formula though, and so what you can see though, if you just eyeball it quickly, the red was above 1.2 for the vast majority of the day, and that would indicate you want to play in that direction. And so all day today, if I were to do anything using our tools, it would be either short stocks, buy puts, or buy country ETFs. Those would be your options if you were going to do anything at all. Now, to take a broader look at things, that would have been, in some respects, a bit bold, until this trend column on the home page turned to down, which of course did happen, I think fairly early in the session today, possibly right at the open, honestly. So yeah, you have down, so you have confirmation here that that's precisely what you could have done. So Glenn was in the trading room today. I'm obviously coming in a bit later in the afternoon to be able to do this webcast, but I do know that he did at least pick up a contra position today, and that ended up being a good decision. And the reason that he picked up that position was because of the indications that I'm showing you now. Okay, and he did so fairly early in the day today, probably, although I wasn't there, probably even before 10 o'clock or right around. Okay, and so pretty cool stuff, when you sit back, and because what a lot of people wonder, of course, is you see sort of this global analysis on the stock market on an end of day or even an intraday basis, where an indicator might turn bearish that looks at week over week action or kind of a more global movement of the stock market. But it's then another thing entirely to have a secondary indicator analyzing the up to the minute data for you, saying, yeah, we're seeing a tremendous amount of magnitude of movement in that direction across the entire market. And so that's what the Derby timing indicator does. And so, when we took those bottom fishing campaigns, we saw the antithesis of what you see here and some other conditions in place. But we had the green bar. Even before the market opened up, the green bar was at 1.8 on many of those occasions. And what that means is the market was exploding up off the lows, and naturally, what you saw in that slide set, a lot of the bottom fishing strategies, of course, then really start to kick into gear and get to the top of this list. So anyway, that's a bit about what we do from a timing perspective. Then in terms of the trades that we're going to take, we let the Derby also help dictate those decisions. And so this tool really has all the answers. It tells us what direction of the market we should be playing, or some days, hey, look, like on a day where the primary wave is up and your tools are bearish, that just means today's not a great day to be playing the stock market. There's too many mixed messages going on there. Okay, but we get that timing behind us, and then let's say it's go time. It's time to buy stocks, or it's time to think about going short or buy contras. This tool will tell us precisely the positions to go after. And so when I look at the top of the Derby right now, just as a quick example, there were some bullish stocks actually making money today. However, as you look at the funny names here, I suppose, what you see is that horse race. You see the performance of these strategies. Within every strategy are the 10 stocks. And so the reason that one bullish strategy was at the top is it happened to find this little DBVT stock today. Okay, and lo and behold, that can be valuable too, even on a down day. If you're fearless, there was opportunity to make money in that stock today. But what we want to do is go the other way, and that is we want a bearish market with intraday bearish timing and in a bearish position, so that we've got all of our bases covered. And so something like a Harris's has-beens, there was plenty of opportunity here, see, and it's congruent with the market condition and congruent with, so this is the adapt and thrive, right? We want to do things that are congruent with what is happening in the market. That way we are participating in the right space of the market at the right time with the right products, with the right entities. So there were plenty of stocks in here ripe for the picking on the short side. If we continue down a little bit further, you'll find your contra ETFs. And so if you're somebody that doesn't like to short stocks, there are plenty of things that you can buy long that make money when the market is falling. And so that's precisely what these things do. And the nice thing is, very quickly, you can get a snapshot of what segments of the market are under the most pressure, so that you can participate in those contra ETFs versus just kind of winging it and saying, well, I'm kind of bearish, so I'm going to go buy the SDOW or the SPXU or whatever for the S&P. Here, it clearly says that today your two best options, and by the way, these would have been your early runners typically as well, that you're far better off in the FANG Plus or the biotech space today really than anywhere else. This high beta one, fairly thinly traded. There's over 100,000 shares traded on average. All of these stocks, or ETFs in this case, have at least a minimum of 100,000 shares traded on average, just to alleviate any concerns there. You might not have heard about it, but that one's a high beta one. It does really move quickly when markets are under pressure. Occasionally you'll see things like the VIX or the UVXY, which is a 3-time leveraged fund against the VIX performance. So it can be certain segments of the market, like the Dow, the S&P, the Russell, or it could be particular sectors, like we have today with biotechs, that are kind of really leading the charge. You'll also see China was under a good bit of pressure today, and of course small caps, which is precisely what I went after today with my own money, was SRTY. Okay, so that's what the tool is, and kind of what it does. So it tracks not only the performance of the stock market and helps us make decisions on when to enter and do so consistently throughout the day, but it also then points us in the right direction, for the trades that we want to take, and do quite well. Okay. All right, so let me get out of here. And over here to the left, we have different modes of analysis. And so maybe it's best if I show you the culmination of some of this before I get into the next subject. So what I'm going to do then is go over to RoboTrader. So RoboTrader is a tool in VectorVest that's linked to a brokerage account, right? And so in this case, on the top one there for the Jockey Club, we primarily use Ally Invest, but we also use Interactive Brokers a little bit. It's kind of an overflow. We also have the ability to sync into TradeStation for those here in the US. Okay, so once you sync your account across to the brokerage, you would then have the ability with something with this tool to just simply from the Derby, right click on some of those stocks and send those trades across. So for example, this is our current cherry picking portfolio. We're down to just 2. We had a lot more stocks than that earlier today, but we're down to just 2 after today's action. I think we were up a couple of percent at one point today, ended up down about a half, but we're up 9%. That 9% really has been achieved since April. So we reset these portfolios from time to time, which is why I tend to capture images like what I showed in the slide set earlier, so that we can preserve the integrity of a lot of this. But literally you're looking at the culmination of every trade that we put into this cherry picking portfolio, you know, for the last month and a half or so. We're up about 10%. So it's pretty good. You know, if you were to think about mimicking all the trades that we've been doing. We currently have 2 left. We've got one, of course, on oil. As I mentioned, we've been slugging away on oil for more than a year, I think, at this point. So this is just kind of the later stages here. The percentages aren't quite as fun, but doing pretty well with that position. And then this little Blackstone. Blackstone kind of quieted down on us a little bit. It was rocking it. This is what the stock chart looks like. It was rocking and rolling. We broke through swing high resistance. We're kind of teetering on some retesting here, and of course oil's gotten pretty high. A lot of people are concerned with that. I don't happen to fall into that camp, but you know, we'll see what the future brings here. But we put stops on all these positions. We're going to talk about stops, you know, here again in a little bit. So everything has got a stop loss on it. We also have you know, more mechanical approaches that we are either in kind of a testing mode, even with live money. This one just started here fairly recently. It's had some pretty wild swings according to the market, but doing okay. Fully automated. We're that thing is just using the top stocks from the Derby from a mode of analysis and just trading it. We've also got, I think, some cherry picks down here. Woo! Gave back some there today. But it looks like Valero is still doing pretty well. All right, so anyway, that gives you a little bit of a feel, right? It's not that every trade we make makes money, but most of them do, you know, and it's really a culmination of using the tools as to how we landed on all these different positions that we've been trading. So you know, if I go back up here to the cherry picking, go to reports, just kind of show you around. We have a lot of big winners, a lot of just small losers, okay? So the big winners pay for the small losers. And so we'll talk about that as it relates to the stop selection that we use here in just a little bit. Okay, so with that, let's do that. Let me get it back into the slide set, make sure I don't miss anything there, and then we'll come back in and talk about stops. So our tip, the thing that we really like to use, is a patent pending stop loss. Well, in this case, you know, yeah, patent pending. We've got kind of 2 varieties of it. We've got Profit Locker and Profit Locker Pro, which is what was tripping me up there for a second. Both, of course, patent pending, really. Pro version being a little bit more elaborate, a little bit more user interaction can be done with that, a lot more advanced, okay? We use just the Profit Locker right out of the box. That is just part of the ordinary VectorVest real-time platform, so there's no additional fee, you know, for this one. And so let me show you what we do. So if I get back over here and go in and take a look at the stops are displayed out here to the right. We do a lot of 28-7, so 28 target gain, 7 loss. From time to time, depending on market conditions, we might broaden that out. For example, back in 2020, 2021, early up until about February or so, we did do a fair amount of 50-15s instead of 28-7s because the market was really rolling. But generally speaking, when the markets are volatile like they are now, and you know, kind of back and forth in quick succession, 28-7 is generally where we're going to be with our settings. So then, what is Profit Locker? And I understand you're shooting for a 28 gain, a 7 loss, but does that mean I'm only closing positions if I get to 28, or you know, selling them if at a 7 loss period, or you know, how does that work? So if I come up here to the management screen, it'll lay out a visual aid for you, which will help me then describe exactly how this thing works. So this is taking those inputs that you saw, the 28 target, the 7 loss. This black line makes an assumption, but that's your stock price line, okay? the assumption that's being made is that the stock price moves up in a linear fashion. So we have to do that in order to display the stop loss curvature, the parabola, okay? So what we see here is that the way this stop loss works is it's got an initial, basically pure trail, okay? So it's going up at the same rate stock price is, trying to get to profitability. Once profitability is achieved, it broadens out a little bit, that thereby giving the trade a little bit more room to hopefully be productive for you. You've gotten to break even. Let's give it every chance and every piece of potential we can without going too nuts to get it towards that target. And then the closer we get towards the target of 28, the tighter the stop loss becomes. And it's almost like a theta curve where, man, when you get to 28, you know, the stop loss is right at 1%. Now, last year and the year prior, we took trades even with these settings north of 40% gains sometimes. I think more than 6. I think 6 to 7, maybe possibly even 8 trades, you know, more than 40%, because they never went down the 1% or they gapped up, or, you know, whatever the case was. They just kept rolling. And so, you know, it seems like that might be a bit tight, but it works for us, because if we can be 40% right, you know, and get a lot more trades towards that 28% than towards the 7, or even 40% right, you know, you're going to do really well. And so that's how this works, and that's all the way down the rabbit hole in terms of stop loss. So it's not a pure gain loss percentage. There is a little magic in between, and hopefully I laid that out pretty well so that you understand it. Okay, so it's a lot sexier than like a pure trailing stop, you know, and so on and so forth, right? All right, let me go ahead and close this out. There, on occasion, we might even do trades where we look at a set of moving averages or whatever. But vast majority of the trades that we do are going to be in conjunction with that stop loss that you just saw. And if it's different, we obviously tell folks. So what I'm explaining here is I'm about to then present you with kind of the pitch, right? You have the ability, if you'd like, to come into a trading room and watch us use these tools to make our own decisions on exactly what we're going to do every single day the market is open. We get together at 9 a.m. We stay together until 10:30 a.m. every single day. And you get to watch us make every decision we can make or need to make. Some days there's no decisions made. The decision is not to do anything, you know, but you get to see it all happen in real time. And that's where folks would tell you the magic happens for them, is, you know, seeing the coaches actually using the tools to make the right decisions at the right time, and hopefully then get the right outcome, at least in enough occasion to be profitable, which is what most people's experience is and ought to be, right? So let's get to it. But before I do, one last thing. I like to get that out there, though, just to let you know what's coming. If I come up here to the Derby tool one more time, there are some other modes of analysis. And so oftentimes you might say, well, I want to go with a strategy that's a lot more consistent than just, you know, the one that's popping today. Well, this tool can do that too, and we actually do that in an automated system. But you can look at the Derby information for a period of up to the last 3 months worth of daily data. So we have this one mode, for example, called Vary the Start Date. And if I just roll this back and we look at a rolling 3 months here, this has been, and we did go long this strategy about a week ago and made about 5%, I think, on that campaign. But best performing ETFs up has been one of the most, actually the most consistent strategy in VectorVest over the last 3 months, because it's not only at the top of the list here, where it's looking at buying the top 10 positions from this strategy and holding them into the future, all the way to the current time. So you're varying the start date, right? So if I would have bought the top 10 stocks from this strategy 3 months ago, it would be up 21%. If I bought them on March the 9th instead of March the 8th, they'd be up 33%. If I bought them on March the 10th instead of March the 8th or 9th, they'd be up 39%, 41, okay? And really did pretty well up until the time we closed down the campaign a couple days ago, because the market started to turn over, okay? So that's kind of the methodology here, but we also cross-reference that data with another one called the sliding window, because this desensitizes market direction a good bit by limiting the testing that you're doing to a one trading week. So, instead of buying stocks 3 months ago and holding them all the way to now, if you bought stocks 3 months ago, you'd only hold them for a week. And then if you bought stocks 2 months ago, you only held those for a week. So if we look at the data set here on bullish strategies, you'll see the same strategy we just saw on the other list, third on this list here. And so that's what we like to see. We like to pick strategies that are high on both lists because they're consistent performers, okay? So here again, instead of holding all the way to current time, this one was just 525 to 61, 7%. 526 to 62, so you could have done about 3% there, right? Some weeks it was a loser, right? That was probably a down market. But what it does is it desensitizes the market direction a good bit by shrinking that holding period down to just one calendar. I say one calendar week. I really mean 5 trading days when I say that, okay? If there's a holiday or whatever. So that's all the way down the rabbit hole at this point. So what I'm showing you though is this tool can really do anything under the sun. It can get you in prolific bottom fishing campaigns that can do double-digit performance in just days, triple-digit performance in the case of a few good months. We're kind of longing for those periods at this point, aren't we? But when the time comes, when the actual market bottom does hit, that'll be the one where the market will rally for months, right? And this tool will position us into a situation where we could make triple-digit returns on a lot of stocks. Right now, double digits this year in long campaigns is pretty good, right? And we showed you the track record. It can do everything from that to find the most consistent strategy in VectorVest, the one that's been making money week in, week out, month in, month out, so that when the market conditions align, that's the strategy you want to pick, right? Or you can get in there, and as we showed, even on today's data, if you just don't care about market timing at all for whatever reason, I'll give you a litany of reasons as to why that's a bad idea in another webcast maybe. But there are opportunities to do that, even within this tool. I wouldn't advise it, but there are opportunities to do even that, right? So it can do a whole heck of a lot for you. The best idea yet was picking up a couple of contra ETFs today, knowing that the market probably, at least heading into tomorrow, is going to have a pretty awful day anyway. And then the timing tool telling us, you wanted to be bearish all morning long. And so even if you didn't carry those positions overnight into tomorrow, there was a good bit of potential just today. Okay, so let me get out of that and kind of just wrap it up. So today you learned how to keep the wind at your back on your short-term trades. It's pretty simple. We use the home page and the Derby timing indicator. If the trend is up, right, then we look for the Derby timing indicator confirmation. If it's above 1.2, we look to buy stocks. If the primary trend of the market is down, we look at the Derby timing indicator. If that bearish line gets above 1.2, we look to buy contra ETFs or sell short, buy puts, whatever you want to do on the short side. Okay. And then you also learned a stress-free way to evolve with the market, because it's telling you not only what to do at what time, it's also showing you the exact stocks that you want to favor at those times as well. So it really does take all of the challenges in terms of choices knocks them off the table. And We also then have detailed the stop losses that we prefer to use. And so we've even given you guidance there. And those, by the way, those are great numbers just in general. So if you're a VectorVest subscriber and you're looking at Profit Locker, 50-15 is really a great place to start, and it's the default choice. 28-7, if you're going to be trading more quickly like us on days to maybe weeks on your trades, 28-7 is a really good combination to think about and to use. Okay. Listen, if you want to get these kind of performances for yourself, I'm going to now show you a way where you can. And we've got people that have been in this room for more than 7 years now. One of these days I should just put those guys on the microphone, because then you're hearing from them. But look, if you want to do this, if you want to get these kind of performances, be able to make 9% in just the last couple, 2 months, right? In spurts, you saw where we made more than almost 20% in a few days. If you want to be able to do that kind of thing for yourself, there's no such thing as you can't. I've learned that many, many times over in my lifetime. You can do anything you want to do. I mean, you really can. You just got to really want to do it. There's, of course, limitations, right? But you get my point. Anything that's plausible that you want to do, you can get it done. And so if this is something that you want to get done, we can make that happen for you. I'm going to say I certainly can help make that happen for you. Okay. So if you want to be able to adapt and thrive no matter what the market throws at you, I can show you how to do that for just 29 bucks. $29 for 30 days. $29 for 30 days. That's less than $1 a day, right? For you to have a chance to go into a room, watch little Stevie Chappell trade the stock market for an hour and a half every day, and decide if that's something that you want to continue to do or not, right? So I figure this. I figure that if you come into that room every day for every trading day, or at least as many as you can, for the next 30 days, you're going to continue on. And that's my bet, because that's what the data shows. So that's why we can offer such ridiculous prices, in my opinion. You're getting some of the very best coaches at VectorVest for less than $1 a day. That's crazy. Ridiculous. Okay, so act now. Now's your chance. I'm going to go ahead and send this out. I'm going to put it into the chat so that all you have to do is really click on it. Those of you that are on YouTube, I can't put the link out into there, okay? But you guys know what to do. It's vectorvest.com/thrive. If you're on YouTube, you know how to get around the internet. So I got no worries about you guys. All right, so I'm going to click this link here just to kind of show you. It's going to take you to this page, and here's where some of the questions that you might have at this stage will be answered. Okay, so when you come here, it's $29 to get started for 30 days. After 30 days, should you decide to continue, it's going to be $249 a month or $25.90 a year. Okay. Most folks would tell you that their experience has been, I've made enough in the first 30 days that sometimes I'm a subscriber for life, so if that's not your experience, then you don't continue. It's pretty simple, right? If this coaching in this room doesn't pay for itself, then you don't continue. So I've always got to be on top of my game, right? All of us here, me, Glenn, Jerry, and Patrick France are going to be your 4 instructors. We try to be on the top of our game every single day, because we know that when we're successful and we're showing you how we're successful using the tool, then you're likely to be successful and you're likely to stick with us. And so if I wanted to get involved in a trading room, check something out for 30 days, and saw that I could do that for $29 with the possibility of knowing that if things go well, that it could be the solution for the rest of my trading days, I think I would try it out. So we hope that that's what you're going to choose to do. We really do. I worked hard to get this deal many, many years ago. It's the same deal now, obviously, as it's always been. But why can I do this? Because I know if I get you in there, there's going to be enough of you that are going to stick that it's worth doing it. Okay? So that's the deal. Let's see if there's any questions, and then we'll go from there. In Canada, where we pay commissions, would you pay 10 commission on a basket of 10 stocks to buy them? In this, yes. The answer to that question is yes. You know, if you can make, you saw 18%, 9%, right? If you can make those kinds of percentages in just days, right? Well, let's put it another way. You know, if you can get reasonably 30, 40% a year, is it worth paying those $10 commissions? Right? So some of it comes down to a function of capital. I'm making an assumption that, you know, we're starting with more than just a couple $1,000s. So if that's the case, then it's, yeah, there's no issue whatsoever. No issue whatsoever. In fact, 20 years ago, I started with about $2,000 myself. And yeah, my accounts, oh, that was a long time ago. So yes, I'm living proof that you can start with very small amounts of money and do extremely well with VectorVest. I'm living proof. Living, eating, breathing proof. All right, let's see. What portion of your portfolio would you commit to this? It's generally the smaller portion, right? So I generally tie up about 80% of, this is going to be personal, okay? But I tie up about 80% of my capital in more what Jim Penna does over in retirement services, which is buying high relative safety stocks, ruler stocks, right? And protecting them with protective puts in times like what we've had this year when needed. And also at times selling covered calls to produce more income, right? So 80% of my capital focuses that way, typically 20% of my, now I have a pretty large account. Probably not as large as some of you guys, but larger than most. Okay, so about 20% of my capital goes this direction. Now the percentages are up to the individual. This is a solution that could literally be 100% of what you do or 20% of what you do, or anywhere in between. Does that make sense? Okay, let's see. What markets does the Derby trade? So we're trading the U.S. market. Now we do have the Derby in other markets. I believe Canada is the other market that we have it in. But we don't have a Canadian jockey club. The jockey club is just for the U.S. And really it comes down to market liquidity, if you want to know the truth. If you're going to trade, listen, I've traveled around the globe and I've been everywhere. UK, Canada, India, Asia, Hong Kong, Australia. If you're a trader, you just got to trade. You got to trade the U.S. market. You just have to. That's where the money is. Okay. They would. All credible traders would tell you the same thing. That's what they've told me everywhere I've been as well. Okay. So, you know, we've got 9,000 liquid stocks here, right? So that's 9,000 opportunities, whereas like it's somewhere in Canada you got a couple hundred. See what I mean? Okay guys, so with that I don't see any further questions, so hopefully we'll see some of you in the room tomorrow. Some of you already said that you're going to be there, so that's great, and hopefully a lot more will make that decision as well. So we get together every single day. I'm going to continue to do this webcast about once a month. So we'll get you at some point. Once the evidence becomes so overwhelming you can't make any other decisions, you'll be there. Okay. But if you're a trader, man, if you like looking at charts, if you enjoy watching the market and getting the best coaching you can get, this is a great solution for you. If you're somebody that doesn't want to sit in front of the computer, you know, doesn't want to be there every morning, you know, then maybe there's other better decisions to make at VectorVest, just to be quite honest. But if you're a trader, there is no doubt in my mind this is the room for you. If you're somebody that just likes to be active, there is no doubt in my mind that this is the right solution for you. Okay, and when you get in there, you'll see why. All right, we'll see you guys later. I gotta go. See you soon. See you in the club.